Navigating the emerging asset tokenization market can be challenging. Given the industry is still nascent, there are no industry benchmarks or standards, and there are limited case studies or reference points which hinder effective decision-making and risk assessment. History has shown that embracing transformative technologies requires time and often requires overcoming initial hurdles to unlock their full potential, and this is no exception. Some of these hurdles include technical, operational, and regulatory and legal uncertainties. From a technical perspective, there are often fragmented solutions from multiple providers, and there's currently no uniform standard for real-world asset tokenization. Each provider may also operate on different blockchains with varying smart contract standards, which all lead to fragmentation of data and liquidity and an inability for platforms to interact seamlessly. There is also legacy infrastructure and competing tech development from incumbents who also carry a little bit of the if it ain't broken, don't fix it mentality. Keep in mind that this is also one of the quickest evolving industries, with new technologies being introduced constantly, so new skills and training will be required to keep up with the quickly evolving landscape. New technology also comes with increased cybersecurity risks. Hacking and malicious attacks increase as more assets go on-chain, so firms must have the capabilities to manage these risks through smart contract audits, penetration tests, and also offer bug bounty programs to stay cyber safe. Market readiness remains a significant issue. There's still a general lack of understanding about asset tokenization and its distinction from cryptocurrencies, leading to mistrust. Education is crucial to building confidence and trust in asset tokenization. And from an operational standpoint, the infrastructure needed to support trading, custody, and settlement of tokenized assets is still developing. Without mature platforms and services, it can be difficult for users to access and manage these assets effectively. Tokenized assets need liquid markets to attract investors, but traditional market makers have been slow to enter the space. While automated market makers have been introduced to address this, liquidity in tokenized real-world assets remains a work in progress. Many expected that tokenization would immediately unlock liquidity, but we're still in the early stages. The first step is still to bring these assets on-chain, and demand eventually in the secondary markets will follow, similar to how it evolved in traditional finance. Regulatory uncertainty is often cited as the biggest obstacle to real-world asset tokenization. Issuers and investors need assurance that their activities are legal and compliant. Achieving compliance on a global scale is complex and costly, especially when dealing with cross-jurisdictional offerings. Firms must navigate varying regulatory requirements, not only in their operating region, but also in the jurisdictions where their clients and investors reside. This complexity significantly raises the barrier to entry and slows adoption. Furthermore, the fear of retroactive regulatory enforcement makes issuers hesitant. Clear regulations from the outset would provide the necessary confidence for broader adoption.